The magazine has just picked out the world's best economic forecasters as well. In Europe, Adam Chester and David Page from Lloyds Banking Group are ranked #1 for their predictions on the UK economy. Also, David Page is a senior economist at the bank with responsibility for Britain and the Eurozone, joins us now. So we'll discuss the UK in just a moment. Let's start with the Eurozone. We're heading into a key meeting next week of EU leaders. Now, we've been here before. There's been this sense of anticipation ahead of key meetings and summits, and then hopes have been raised and dashed. Are you optimistic as we head into this new meeting? What are your expectations?
I mean, history cautions against being too optimistic, and cynically, as you suggest, we've been here before. But there do seem to be some key changes. I think last week's meeting with Merkel, Sarkozy, Monti did seem to change the tempo with which they're talking about the longer-term governance reforms. And then since that debate has come into play, we do seem to have seen some softening in some of the other more entrenched positions. We've seen Merkel looking at IMF changes. We've seen Draghi suggesting, hinting that the ECB may be willing to up its response in the wake of governance changes. And I think that's what markets are hoping for. They know that this is going to be a long-term change. Merkel's made that point again today. But in the short term, I think the ECB will be hoped, or some form of ECB backing will be hoped to break some of the contagion that's really racking confidence and is weighing on real economic activity.
How do you reconcile comments from Mario Draghi that, not even comments, we should say indications that the ECB may play a more extensive role, with what we hear from Angela Merkel today, that their role needs to be clearly defined and that they cannot get involved in an unlimited way?
Well, I don't think they will get involved in an unlimited way. I mean, for one route could be just an extension of the SMP programme, the bond purchase programme that the ECB already has to protect the transmission mechanism. Draghi has stressed this is a temporary measure. One could see a roadmap with treaty change in governance.
Would that be enough to restore investor confidence?
If it was used aggressively enough, then I think it would. Clearly, it hasn't been used too aggressively at the moment. I think the ECB, the other thing that Draghi said that was key was the sequencing of events.
Yes.
Draghi wants to see some of these long-term changes in place before he ups the ECB's commitment, and I think that's where we're moving to.
But I suppose the problem with that is there is a bit of a timing issue going on here. I mean, EU President Herman Van Rompuy has been questioning this idea of policy through EU treaty change. He's saying, look, it's going to take too long. This process is too lengthy. We need something now.
Yeah, well, I think what you need is a commitment from the governments that they are doing something in the long term, and then I think what's likely to happen is you'll get a short-term measure which bridges that period, and that might be a temporary intervention from the ECB. It might be something through the EFSF. Merkel today was saying don't disregard the EFSF. Clearly the leveraging plans at the moment we think are inadequate, but that doesn't mean there isn't a successful way of leveraging the EFSF, and that might come through the ECB's balance sheet again. So we think that there's going to be a short-term bridge that effectively bridges the gap to this longer-term governance change that seems to be what Merkel wants to stress as the key change, this fiscal union.
And complicating all of this, we are seeing increasing pressure on the banks right now in the markets. I mean, a number of reasons for this. Of course, it's not just about their exposure to European sovereign debt. It's also about pressures coming from regulation. But are we seeing signs of a credit crunch emerging in the euro area?
Yeah, I think we were. I mean, the OIS spreads were rising, have been rising dramatically for the last couple of months now. And I think what we saw from the coordinated intervention from the central banks providing dollar liquidity earlier is something that should alleviate some of those pressures. Clearly, the ECB is also stepping up to the plate here. We've already had a 12-month LTRO. We've got another 13-month LTRO coming ahead. And we're hearing the talk of the ECB talking about 2- and 3-year LTROs as well. So I don't think any of the central banks are blind to the liquidity issues that are in markets at the present.
But when we see, yes, it was very substantial, central banks around the world joining forces to boost liquidity in the system, but those measures, short-term solution?
Yeah, they're reactive solutions to a growing symptom. The symptom was a growing credit crunch, and hopefully this scotches it and it starts to take out some of the tail risks of dry liquidity over the Christmas season. But it doesn't provide a long-term solution at all. This is a short-term sticking plug, not even a policy measure. This is literally to avoid some of the worst tail risks evolving.
Of course, Bloomberg Markets magazine has named you as the top forecaster for the UK, so why don't we discuss that now? Because earlier this year, Lombard Street Research estimated the UK's total net debt, excluding financial sector, is at 237% of GDP, so slightly higher than Japan, nearly as high as Spain. What does that amount to have levels of that debt combined with bleak growth prospects?
It's clearly a very bleak outlook for the UK, and I think the autumn statement despite having some, what we would argue, a slightly rosy forecast, some of the GDP numbers, still suggested that we were seeing significant borrowing and that we were going to increase austerity measures through to 2016, 2017. And this is not a pleasant time for the UK economy. I think, though, that what one forgets is that we're basically suffering on the edge of the Eurozone at the moment. If we see some fundamental progress in the Eurozone, if the Eurozone starts to recover, then we think that the UK is well placed to rebalance. Now, that rebalancing isn't something that's going to happen overnight. You're going to still need to see a number of years' worth of growth, but it will take some of the pressure off of the government.
I mean, it's a very abstract concept, isn't it? We keep hearing about the need for the economy to rebalance in this country. The fact is, I mean, how much are living standards going to be eroded by inflation potentially, and then, of course, austerity? And does the government have a plan in place to deal with that?
Well, from the household sector, I mean, unfortunately, we talk about rebalancing. We're talking about rebalancing for the UK economy as a whole.
Yeah.
The household sector is going to be under pressure for some time to come. Now, we're hoping that real living standards aren't going to fall dramatically next year. They did this year. The high levels of inflation really eroded those real incomes, and we did see living standards fall. We think that should stabilise as inflation falls back relatively sharply across the course of next year. So the household sector shouldn't get too much worse off. But what we're looking for when we're looking at driving growth for the UK is a pickup in exports. Now, that is coming through in areas like China, India, Russia even, where we're seeing very, very strong rates of export growth. But clearly our biggest export market is Europe. We need to see some recovery there to alleviate some of the longer-term pressures.
Right. Thank you very much. David Page, Senior Economist at Lloyds Banking Group, #1 forecaster on the UK economy. Good to have you on the programme.